What are the best news day trading strategies? Now, with our firm, you cannot trade the news, right? We have a rule: 2 minutes before and after tier 1 news, you cannot be in a trade, but news days offer excellent opportunity in the market. The range is likely expanded, right? There's increased speed, there's increased volatility. How can you use that to your advantage? In this video, I'm going to talk just about that, right? The session or the current market is actually still open. I actually want to sit down and use this as an example because I traded today. It was a great market opportunity. Go over some of the TA that I did on the higher time frame, right? This is something that you should always be doing before you get into a trade. And we'll also touch very quickly on risk management, where you would place your stop in the trade that I took and capture some good EV. So this is a good follow-up if you've joined our live education session. Sol and I did in the MyFundedFutures Discord. If you're not a member of that Discord, go ahead down below this video, join the Discord today. Make sure you get in on some of the things happening in the community, all the giveaways, things like that, and subscribe to this YouTube channel. But yeah, this is a good follow-up to that session where we talked specifically about expected value and risk management. They're always tied together. If you're coming from Forex, you're probably used to thinking of, risk to reward and things like that. So we're going to lump all of that together. This is going to be a very active, real world example type of video talking about the trades that I actually took today. Again, it is the middle of the day. It's 12. So these are trades I took today. The market's still open. You're going to see on my screen, when I open my screen, the market is still open. I'll show you what we posted in our Discord, really the setup for this trade from yesterday. So I know news days can be very, very volatile. As always, you need to have a plan. So look at some of the other videos, how to make a trading plan. It's going to be very relevant to here. That's exactly what I did. I created a trading plan. You'll probably notice the theme of how these videos go. Talk about something, execute on it. Okay, so create a plan. When you trade with a plan, you can be very, very confident. And when you're confident, you can hold and you can make money. Okay, the amount of money that you make, we're not going to talk about that, is always dependent on leverage. So profits are always a factor of leverage. I'll say that again, profits are a factor of leverage. So I might get 10 points. You might get 10 points. I could be 1 M in Q. You could be 5 in Q. Same trade, different profits. So our risk is always going to be based off of the expected outcome or expected value of the trade when we talk about trade setups. For those of you who are new here, my name is Forrest. I'm partnered here with MyFundedFutures. Definitely check out my channel below. Tons of videos on everything we're talking about, and check out my Discord as well. But for now, let's go ahead and hop into the chart and talk about this data, CPI. I'm now recording my screen, and there's a few things I want to call out here. So first, I actually want to go to the Discord. So in our Discord, if you come into our Discord, you can come to Admin Thoughts. All right, we have a channel called Admin Thoughts, and this is what I posted yesterday, 7:49 p.m. Okay, it's currently Wednesday, April 10th. CPI was this morning, 8:30 a.m. There's a huge move. So how do we plan? How do we react to these moves, or do we need to react to these moves? Okay, all questions you probably have in your mind. So what I did is I went to NQ and I scoped out some major targets based off of what I was seeing. So I posted this yesterday. I'm just showing this. We're going to go back to TradingView and look at it to show that you can approach data with some setups, right? You don't have to just react and be freaked out, zoomed in on the 5-minute chart. So let's go back over to TradingView and take a look at what we have here. Okay, so on ES and NQ, there's a few things that we could see. Let's go to 2 charts, NQ on the 4-hour, and there's that chart with the targets. I took a long, if we just take a look at NQ with these 4 different primary targets, right? So I had a downside target 1, a downside target 2, a topside target 1, and a topside target 2. So you can see that my one target was a little bit far, and we can clean up this chart a little bit. I know there's a lot of lines here. Each of these do mean something. I can get rid of this one. This is something I drew for this session. We don't really need it for now, okay? But this is generally the TA that I was looking at for yesterday, all right? So obvious trend on the bottom. There's a top trend line. We front ran this a little bit. If we look at the visible range volume profile, though, we'll add that in to get some intuition about what I was seeing. So why do I have this red box? Okay, because this is an area where we know buyers exist. They touched it 1 time, 2 times, 3 times, 4 times. I'm trying to draw circles. 5 times, 6 times. This is today. So in trading, I want you to write this down. What has the market done? Because I am going to plan for them to do it again. Okay, write that down. Most of your trading plan should be looking for the market to replicate what it's done. It's the simplest way to trade. Doesn't matter what strategy you're trying to do, right? If you believe in fractals, if you're doing ICT, if you're trading off the temperature outside, or which, whether it's a groundhog coming out the ground. I don't know, guys. Doesn't matter. Okay. What has the market done, and when is it going to do it again? Okay. That is the general box by which you strategize. Cool. So we know that there's buyers here. We also know, just looking at the volume profile, that there is a shelf here. So there's a low value node here. So I am a volume and price trader. So in addition to just drawing lines and looking for clear supply and demand zones, there's always confluence here. You're going to end up with confluence at major pivots, right? It's not magic. The fact that there's always, bids here means that we end up with a LVN right below it. So there's a low value node here. We bounce out of LVNs. There's another node up here. Then top side, the reason I had my top side target here was because we had the shelf. Okay, pretty clear. Now I could have used this, but I don't just trade NQ on its own. I trade NQ in reference to ES all the time. So I also had, we open up our ES chart, okay, this top trend line. Now ES went to this top trend line perfectly. And this is great because right when ES touched this trend line with data, we had a short opportunity. Now, in MyFundedFutures, this isn't a trade that we could have taken, right? We can't take trades at data, but that's fine. There's always reactions to data, okay? You can always react to the data, and it's a viable strategy. So don't get all bent out of shape about it because there was tons of opportunity, right? We got over 100-point long today off the lows in our Discord, okay? And that's just by doing some very, very simple TA. I mean, look at this, guys. Look at this. Look at how simple this is. We'll get rid of everything but the lines here. We have a simple resistance line and a support line. And then if we zoom out, you can see that we're in a macro range. That's all this is. And I'm looking for confluence with these lines, of course, because we do care about volume. Volume is a critical factor. So we always want to look for confluence with volume. But these trend lines form because we're in an auction and people are looking for good prices. That's why we end up these lines, right? The lines are really just a projection of people repeating action over and over again. In any case, we get this rejection here. So let's go down to the 5 minute and we'll go to the 5 minute on NQ. We've got a lot of stuff on the charts, but we'll zoom way in. We'll zoom way in to make it easy. Normally I would remove this when I'm filming, but I'm going to trade the afternoon. So we're going to keep this on. So you can see right when we rejected, that top trend line is right when the sell-off started on NQ. So this was a data candle. We couldn't react to that, but look where we went, guys. Look where we went, right? With enough time afterwards, by the time we got into this dip, and we even double dipped into it, it's 9:10, right? This is 35 minutes after the data at this point, right? That's a trade we could take in MyFundedFutures, okay? That's a trade we could take in MyFundedFutures. And if we look at the size on this, that's 172 points. The best part about this, we zoom way out, zoom way out, okay? We'll get rid of this line even, this orange line, go to the 1 hour. Okay, and let's talk about how do we manage risk on this long. Something we talked about in the Discord, expected value. What's the expected value on this move? We have this big range that I've carved out. So if I think this is the lows, every time we've came into this area, we've come up pretty high. Like here's a bounce here. We went up 300 points. Last time we bounced here, this was 363 points. So I could reckon that I'm definitely going to get at least 100, right? Maybe 200. We could chop, retest it. But my stop, I'm pretty comfortable having a stop. Maybe, actually, we'll just do a line here, okay? And we'll color it blue so you guys can see it. Style and blue, right? Text, long stop. So I would just put my stop right out the range, outside the range. And you could look, technically outside of this box. I have this box marked as it is for a reason because this entire zone is my buy zone. So I could put my stop out there. I could put it up here, depending on your risk size. But this is a very good long. This is an A trade, right? And A trades you can size into, and that's relevant to you in your account size. A big trade to you could be 5 NQ. A big trade to you could be 6 MNQ. Okay, whatever it is, this is an A trade. You can have a very tight stop, And in terms of RR, okay, the RR on this trade, and I was actually talking to somebody about this the other day, was like 1 to 150. I think the conversation about risk to reward is completely approached wrong, especially by new traders, because new traders think that it's good risk management is as simple as having a tight stop. That only matters according to a good trade. Your focus should be good trades and then how to manage a good trade. And I know that sounds cliche, but here's what most of you do. Most of you are doing tight risk on bad trades. And it doesn't matter if you have tight risk. If you lose, it doesn't matter, okay? You have to have a good trade with good expected value. So how do we have a good trade? Well, I'm looking at the edge of the market. It's right here, right? We have the edge of the market. We know that there's buyers here. If I'm wrong, I'm probably going to be very wrong. We're probably going to fall off a cliff. So it's fine if I'm wrong because this is such a major level. It's actually okay if I'm wrong because I can immediately flip bias. So it doesn't even matter if I'm wrong. If I'm wrong, I can have a tight stop. I'll find out soon and I can flip bias. Wasn't wrong. Easy 100 points because of the range here. And you could take profits wherever, right? You could hold this long all the way up to the top of the range. Okay, massive trade, 400 point possible trade. And you could just sit in that for hours and hours and hours if you like, right? So the risk to reward here is exceptionally good based off of the expected value. The expected value is based off of the expected outcome of the trade. Where do I think the chart is going to go? Where do I think price is going to go, right? That's how we determine expected value. Expected value is based purely on where we think price will go, not risk or profit targets. We'll say P&L based. Okay. I want to be very, 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 very particular about the words I'm choosing here. All right. Because words matter, semantics matter, especially in trading, because what a lot of people are doing in practice, what you're actually doing is you're looking at trades and you're saying, all right, if I go short right here, this is a 1-to-1, but it's not. Okay. This is not a 1-to-1 because in reality, this is likely just going to test the lows. Okay. It's probably going to test this major line here, and your risk, yeah, is right there. So the RR on this isn't too good, but this might be a trade you take, right? If there's a setup on the lowers where you're very, very confident it's going to go low, that's fine. And you could you might be able to refine your stop. On the flip side, right? If I were to flip this around and take a long position, right? My long position, my downside risk was like down here. My entry was actually like up here, and my take profit was like up here. Okay. These are the types of trades I'm in, but I don't think about risk reward at all. I'm gonna tell you guys right now, it's completely an observatory kind of measurement, right? Something you look back on. When you're looking forward into a trade, which is what trading is looking forward, you need to ask yourself, what is the likelihood that I'm right? Okay. That's the first question you have to ask yourself. If I take a long here, what is the likelihood that I'm right? Very, 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 very likely. And if I'm very, very likely to be right, then all I'm doing is min-maxing where I get in. But in particular, if I think this is going to go up 300 points, I could enter here, I could enter here, I could enter here, enter here, 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 right? RR is always going to be just based off of your entry. And I know it sounds super cliche, and I know people are going to get hung up on it, but I really want you to approach trading from the question of what is the likelihood that I'm right, okay? Because what you will do is you will chop yourself up on a million trades that have good RR because you're not actually analyzing the market. Okay, you need to have a thesis for where you think the market is going to go and what you think the major liquidity targets are, and you need to trade into those, right? You need to look at what the expected value, the expected outcome is of the market and trade into that. Because if you're not doing that, your risk management is completely irrelevant, okay? You can put on a trade with a 1-point stop and a 15-point profit target, and the likelihood of it hitting will be 0% because you're catching a knife. Okay, it's not a good trade. It's just not a good trade. It's not a good trade. See it all the time. Okay, so stop focusing on RR and instead zoom out, zoom really far out and ask yourself, where do I think the market's going to go? What do I think the major pivots of the market are going to be? And can I take a trade at the pivot of the market? Instead of taking a trade here, right, which I imagine a lot of you did, are you taking trades here? Are you taking trades here? Are you taking trades here, here, right? It's very obvious and simple because that's how your trading should be. All right. That's my philosophy in trading, especially now. I started as a swing trader, went very, very down to the lowers, got pretty good at scalping, and now I'm zooming all the way back out, especially my personal account. My trades are much bigger. You need to be zoomed out so that you can catch these big moves. So that's it for this video. I actually need to run because I'm expecting this to test the lows and I actually want to possibly take a long there. So I'm going to go take a look at the charts. I hope you found this video useful. Make sure you subscribe to our channel. Join us in the MyFundedFutures Discord. Also, personally appreciate it if you hop on over to my channel, subscribe, and join my community as well, where we trade every single day live and teach people how to trade. Nonetheless, good luck in the markets, and I'm looking forward to seeing your first payout later.